Charge going up, fire in the hole, go. 1. Left clear, servers on the right, main floor clear, moving deeper.
Room secure.
Left. Multiple terminals, all live. Drives in, pulling the data now. Package secured, moving out.
In this lesson, we're going to expand on what we learned about support and resistance by exploring the concept of supply and demand zones, the levels where institutional traders leave their footprints. While support and resistance show where price reacts, supply and demand explain why it reacts. These zones reveal the true balance between buying and selling pressure, and understanding them helps you see the market the way professionals do. Let's start with demand zones. A demand zone is an area on the chart where buyers have previously stepped in aggressively. It's where large orders caused price to rally quickly, often leaving a strong bullish move or a long rejection wick behind. When price returns to that area later, there's a high probability that those buyers or new buyers will defend it again. That's why demand zones often act as strong support. You'll usually spot them at the base of a sharp move up, a small cluster of candles where the market paused briefly before launching higher. Now let's look at supply zones. A supply zone is where sellers took control and drove price down with force. It's where institutional selling began, causing a fast drop or a clean bearish engulfing move. When price revisits that area in the future, sellers tend to defend it again, creating resistance or sparking another sell-off. You'll often see these zones form at the top of strong moves, right before large red candles or impulsive sell-offs. Think of supply and demand zones as the origin points of big moves, the footprints of smart money. Retail traders chase price. Institutional traders create the areas that move price. Here's how to identify them. Look for a strong impulsive move, either a rally or a drop. Trace that move back to the small consolidation or base where it began. Mark that area as your zone. From the candle body to the extreme wick. When price returns to that zone, you're watching a potential decision point. Will institutions defend their previous positions, or will the level fail? Not every zone will hold, but when they align with trend direction, higher time frame structure, or key psychological levels, they often produce powerful trades. For example, imagine NQ rallies from 15,200 to 15,600 after consolidating near 15,180. That small base at 15,180 to 15,200 is your demand zone. If price pulls back later and shows signs of rejection there, that's a high probability long setup. The same logic works for YM. If price dropped hard from 38,400 after consolidating around 38,420, that's a supply zone. If YM rallies back into that area and starts rejecting it, you might look for short entries in line with that structure. The deeper you study this, the more you'll realize supply and demand are not static. Zones weaken after multiple tests because each touch consumes more of the unfilled orders that made the zone powerful. Once those orders are absorbed, the level loses its strength and eventually breaks. That's why experienced traders focus on fresh zones, areas that haven't been retested yet. The first retest of a clean zone often gives the strongest reaction. Combining this concept with your knowledge of market structure gives you a complete map. Structure tells you the direction, supply and demand tell you where to enter. Remember, supply and demand trading is about anticipation, not reaction. You're planning trades where the big players are most likely to act, not chasing after them once they already have. Before entering any trade, ask, am I trading near a fresh zone? Does it align with the higher time frame trend? Has price shown rejection or confirmation in this area? If the answers line up, you're trading alongside the institutions, not against them. In the next lesson, we'll go even deeper into technical analysis tools, the indicators and techniques you can use to confirm these zones, measure momentum, and refine your decision making.